Hello, everybody, and welcome. Today, my guest is Christian von den Busch from Lombard Odier Investment Managers. Christian is the portfolio manager of the global fintech strategy, and today we want to discuss China's plan for a digital currency. Welcome, Christian.
Welcome. Thank you very much for having me and your interest in this topic.
Christian, China is not only a pioneer when it comes to electronic payment, but they are also pioneering digital central bank currency. So what are China's plans?
Indeed. So China has been leading the way in terms of many fintech innovations, like on the payment side or digital banking side. And China is leading the way as well when it comes to CBDCs, or central bank digital currencies, as they're called. They started the research into the project already 6 years ago in 2014 and are now in a pilot phase in 4 major regions in the country. And the key features of the DCP, as it's called, the digital currency electronic payment, is first of all that it's been issued by the PBOC, the central bank, and pegged 1-to-1 to the RMB. That no citizen nor institution is allowed to decline the acceptance of the digital currency, so it should lead to a broad-based acceptance. It enables offline transactions, which is very important and a key benefit in especially the rural areas where internet penetration is not high. So it should result in financial inclusion and include millions of people who currently don't have access to a financial system. And a very important feature of the DCP is that China actively involves the big 4 commercial banks next to the big tech platforms and the telco operators. So they really choose to incorporate the banking industry in the distribution of the DCEPs. An alternative model would be that the digital wallets would directly be held at the central bank, but they deliberately chose not to. They chose for financial stability and used the banks for distribution. So with that, China could become the first central bank worldwide to have its own digital currency. And the expected implementation is already before the Winter Olympics in Beijing in 2022. So that's a good year from now.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much. And enjoy the video now. So what is the difference between decentralized cryptocurrencies and China's plans for a central bank digital currency?
So the difference are many, but the similarity is, for a start, is that both of them probably will use the blockchain distributed ledger technology for verifying the transactions. But the big difference is that the CBDC, or DCP as it's called in China, is a digital form of fiat currency. So money that's been established by the government or monetary authority. While cryptocurrencies, of course, are issued and used independently of governments and central banks. So that's a very big difference. And of course, the CBDCs adhere to all financial regulations because of that, including KYC, anti-money laundering. And because of the peg to the fiat currency, they offer a stable value, whereas cryptocurrencies are much more volatile in nature. So from a payment point of view, that makes them very equipped, given the reliable nature, but as well the stable value of the underlying DC. Now, another benefit of DCEP or CBDC over cryptocurrencies is that they lead to financial inclusion, as is a very low cost way of getting access to a stable and reliable digital wallet at the central bank. And last but not least, they can be used for monetary policy, as the CBDCs are part of M0 money supply. And by that, you can withdraw or issue money into the system. And of course, that's not possible with cryptocurrencies. And actually, one can take it one step further. It could be used for targeted direct stimulus as well. Of course, if everybody has a digital wallet, it's very efficient to put money into the people's digital wallets, which is more efficient than sending millions of paper checks like is currently happening.
So we hear a lot from China about digital currency topics, but what are the digital currency plans in Western economies?
Yeah, so China is really leading the way, as mentioned in the introduction, but CBDCs are on top of mind of every central bank, and it has actually accelerated. On the one hand, because of the speed in China and the implementation that they are already doing, but as well because of the rapid decline in cash, which has been accelerated in the current crisis, where a lot of people now choose to pay digitally. And finally, because of private initiatives like Facebook's Libra project, which has really been a wake-up call to many central banks. So according to the BIS, approximately 80% of 66 central banks are working on a CBDC, and that is accelerating. So every day we read more initiatives. But it's not only central banks, as well private companies like MasterCard, who has a virtual testing platform for CBDCs. Or recently, Dan Schulman, CEO of PayPal, who mentioned in an interview that they are opening up their huge global payments platform for cryptocurrencies in order to be prepared for CBDCs in the future. So with that, you have instant access to hundreds of millions of users once CBDCs are introduced. So the biggest or the main examples of CBDCs are the e-krona in Sweden, which is currently in pilot phase. Of course, the digital euro, which is in a consultation phase right now. And somewhere mid next year, we will have the go or no go by the ECB. But the Fed as well, together with the MIT, are looking into issuing a digital US dollar. And Brazil wants to implement a digital currency before 2023 in combination with the PIX instant payments platform. So there are many, many initiatives going on worldwide, not only by central banks, but as well by private companies.
To what extent can China's digital currency plans challenge the supremacy of the US dollar internationally?
So in first instance, the PBOC sees DCP as an internal Chinese project in order to step up the retail electronic payments and the financial inclusion of the Chinese. But at a later stage, it could help drive the internationalization of the RMB as well, especially if the 50 million plus Chinese who live overseas are going to use the digital RMB for international payments and remittances. So in first instance, we don't expect any material impact on capital flows, but longer term, it could drive the internationalization. What is, however, very clear is that central banks need to rapidly catch up with what's going on in China in order to prevent the uptake of a digital RMB and capital flowing out of the countries.
So will there be a race between decentralized currencies like Bitcoin and the central bank supported digital currencies in the near future?
Yes, I certainly think so. I think the CBDCs will become a viable payment alternative to cryptocurrencies, given that they're issued by central banks, that they are reliable, adhere to all the financial regulations, and very importantly, have a very stable financial value, which makes them very equipped for payments. The only reasons why I see cryptocurrencies can coexist in the long term is either because of their speculative appeal or because of people who want to stay out of the regulated system.
Finally, the question that all of us investors are interested in: how can I participate in this trend towards digital currencies as an investor?
So one can invest in the beneficiaries of digital payments. So the shift from cash to digital form of payments, which is accelerating because of the current financial crisis that we're in. And people start to use more and more digital ways of payment, which is supported by government and health organizations as well, in order to have people stay healthy. So you can think about payment processors, the merchant acquirers, or the networks who will benefit from a further digitization of money. So that's the first part. And within the payments, we really prefer the merchant acquirers, so the B2B players over B2C, because they are payment agnostic. We would continue to avoid commercial banks because longer term, after fintechs already cannibalized a lot of the profitable businesses from banks, now they're starting to compete with the central banks for deposits. So further disintermediation in the long run is a risk. And then finally, what we prefer to do with every new technology is to invest in the picks and shovels, so the enablers of the digital transformation. Think about IT service companies, software companies, consultants who benefit from the digitization of the central bank currency. So yeah, that's the way we would benefit from the CBDC in the long run.
So this was Christian von den Busch from Lombard Investment Managers. Thank you very much, Christian, for being with us today and sharing your views.
You're welcome.